All right, so this is week 25, outlook number one. Let's begin with the pound futures. So, um, some BS, right? We have a little bit of movement toward or against the trade after, claims of the Iran deal having stuff, but primarily, I don't even, it's not even really anything to discuss. The price action is still playing out favorably. We did have consider this a retracement to pull back to mitigate whatever is over here, and then we can see that had a favorable response to start pushing price lower. So still expecting the price action to remain bearish, pushing towards this target, and all that we've done effectively with these two new significant lows here, aside from the other ones, the minor ones, is generate even more liquidity, setting up for a price to make a run on these lows. But these two lows have not taken out the original low, so these are relatively equal lows, which means that there's just we're just adding to the liquidity pool, which means more easily, it'll be more easy to get out of the trade, assuming that it goes in the direction that I expect it to go. And then after that, the analysis is still looking for price to mitigate the area of interest that I've had marked up for a while now. So I've been in this trade for a very long time, but that's cool because I'm a swing trader. All right. So anyway, moving on to gold. Gold decided actually to forego mitigating or actually exiting this range. It went to very, very close to the discount, literally a 99% retracement. And then we had a bounce to go higher. So we're still looking to see what gold does. I still wouldn't, look to trade it personally, because there's been no opportunity that I see that I would like to hold. Once we break this low, depending on the action that occurs, then I'll start looking for opportunities to trade gold, and most likely, yeah, I'll just say keep it there. Look for opportunities there. All right, on to the Nasdaq. So what ended up happening? Oh, I see the chart shifted. So let's actually clear some stuff here. We're going to get rid of you, 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 and you. Okay, so what we had been looking at before was saying the market is still in a bullish run, and then we had the beginning of the retracement or pullback, which would most likely establish a range. But it looks like that we're kind of battling that, and that's based on the fact, after I just cleared all the markings, that we had basically two liquidity draws. The first one, or actually, we had a liquidity draw. The liquidity draw is here. Now, we took out this low, and we'll have to do some reassessment a little bit later to see if this low is actually, the one that's really significant. But as of right now, this low is holding up to be significant because we performed a liquidity draw on it. So for me, how I view a liquidity draw versus a break of structure, if the candle body closes below that particular low that I'm looking at, then that is a break of structure. If the body closes above the wick, but it does, purge it, then that is a liquidity draw. And then on top of that, if it forms a low, then that is also confirmation that this is a liquidity draw. And so what happened was, if this was my structural point, and now I'm starting to remember, if this is my structural point, then all we did was shift the structural point from here down to here, based off of the action of a liquidity draw. And so now, after we've shifted the structural point, any price action succeeding it, if we don't break this low, then we assume continuation of bullish price action. And that is exactly what happened. You see that we came close, but we did not mitigate this structural point. We didn't even, perform an action at it. There was probably something inside of this on a much lower time frame, and that's what mitigated and caused the run up from a price action perspective, but understanding that this was a part of the SpaceX IPO. So this immediate dump here was all to prepare for basically the IPO push. And from the price action perspective, we did not mitigate or purge this structural point, newly established structural point, and so price gave a response to start moving higher, and that's exactly what's happening here. So for all thoughts and purposes, this is a continuation of the bullish price action that we're seeing. So we now have our new structural point that if this structural point breaks, as of right now, because we have not taken out this high, but if the structural point breaks, then we will have to assess the action if it's a break of structure or liquidity draw and decide what we want to do from there. But until then, we assume continuation of bullish price action. I do see immediately, right now that we have to look at both sides. This is a liquidity draw, which has now formed a high here. So this is a possibility where price could begin to give a favorable response and start pulling back to mitigate some of this inefficient pricing here. So we're going to be looking for that here probably in a moment. And what's also immediately apparent to me is the fact that we had inefficient pricing generated here in the form of a price gap existing from this area here. And so after that, that is what led to the break of that high there. And so if price is to pull back and then continue higher, I would most likely look to see for price to pull back and mitigate this price gap that it generated post mitigation of this price gap here. So we have action mitigation, a break of structure of this high here, and then we have the creation of this new price gap, which is here. And so I would like to see if we are looking for continuation of bullish price action, then I want to see price come back and mitigate this area of interest here and then start to move higher. If not, then what I'm seeing is there's really no stopping price from going lower. This is basically, to me, the last line of defense other than a potential liquidity draw on this low here. But other than that, that's basically what I'm seeing, and the counter narrative is the play right here based off of uh, the the liquidity draw, or yeah, the liquidity draw here. That's actually formed. All right, so that's NASDAQ. On the Dow Jones, we have decided to create new all-time highs, and we actually got a break of structure here. So that's very interesting. Like I said, the body closed above the high, so because of that, that's a break of structure. So we should be assuming continuation of bullish price action. But we did just form a high, so it is possible that price is just looking to pull back to mitigate, um, you know, and fill in any inefficient pricing here. But there's nothing that immediately stands out to me per se as far as a inefficiency object, which is a sponsored candle or a price gap, because I need to see an action and mitigation to validate that inefficiency object itself. There are none in this immediate push here. Now, what I'll also say is that we do have the liquidity draw, which established, if this is a structural point, then all we did was shift the structural point from this low here to now this low here. And so I'll annotate that as so. Okay, so that's our new structural point, and we have basically a new price leg that's looking to be formed. We have effectively, a low, high, low, high, low, high. It's up to interpretation. But effectively, what we're looking for now is a pullback or continuation of bullish price action until we do get the pullback, and then we start looking for price action. So still, yet and still, unless you caught, this play here, you're sitting on the sidelines waiting for price action to develop a little bit more to yield out some swing trades. Until then, day trade demo as you see fit. All right, and then on oil. So oil is very, very sensitive to real world events right now. And we annotated last time that we had a liquidity draw and that started to push price up. But it seems that we also had mitigation of this price gap here. But to me, like I said, there's no action of mitigation, valid action of mitigation. So this price gap, this is just mitigation of a price gap. It's not something that I would personally look to trade off of, but it did give a very valuable or very favorable response from its mitigation, leading to the purging of this low and this low here. And if I scroll back a little bit farther, we may have gone a little bit lower. So yeah, we have gone, lower there. So we've had multiple breaks of structures of these lows here. We can see that we have a close of the body below that wick, and then we also have a close of the body below this wick here. And so if we're looking for anything, it is possible that price begins to pull back to fill in whatever inefficiency is here. But as of right now, if we're following the price action, price should be looking to start targeting the very next low, which is here. And that's just looking based off of the immediate data available right here. If we keep scrolling back a little bit, and if we see anything, which I don't see at the moment, as far as continuation of bullish price action, then I would see it otherwise. But as of right now, I see this continuing lower in order to achieve or meet this target. So not really much on that. Now, on cattle futures, not much, just consolidating. All right, that was a pretty lengthy one compared to the last few. I'm going to start getting a little bit more efficient with this. Week 25, outlook number 1. Peace.